VeChain just dropped a bombshell that could completely reshape its future. Or, it might just end up as another overhyped announcement in a sea of broken promises. The network is ditching its proof of authority system for delegated proof of stake, and honestly, the timing couldn't be worse. VET is bleeding, down to 1.56 cents. Technical indicators are screaming danger ahead, and December, historically VeChain's worst month, is kinda lurking around the corner. So is this upgrade the catalyst that finally wakes VET from its slumber, or are we just watching a sinking ship rearrange its deck chairs? Buckle up, because this gets interesting. What's up, crypto fam? Welcome back to the channel. If you're holding VET right now, you're either incredibly patient or incredibly stubborn, possibly both. Today we're diving into VeChain's mainnet migration, the technical nightmare unfolding on the charts, and whether this DPoS upgrade is your golden ticket or just expensive hopium. If you find value in this analysis, smash that like button, subscribe, and hit the notification bell so you never miss these market breakdowns. Let's get into it. VeChain is making moves. The project announces it's migrating from proof of authority to delegated proof of stake through something called the Hayabusa upgrade. According to VeChain's official statement, this shift returns power to VET token holders, allowing every holder to stake and delegate to network validators. They're promising enterprise-grade utility with 100% uptime and predictable fees that businesses actually need. Sounds fantastic on paper, right? Now here's the context. VeChain has always positioned itself as the enterprise blockchain, the one that corporations trust for supply chain management and real-world applications. But VET's price action tells a very different story. We're trading at 1.56 cents, sitting below every major moving average like a student who forgot to study for finals. The 50-day EMA is at 1.82 cents, the 100-day at 2.03 cents, and the 200-day at 2.289 cents. Translation: the bears have a chokehold on this token. VeChain claims this DPoS migration will fuel the network's next phase of growth without compromising what makes it special. They emphasize that token holders gain direct roles in security and rewards, node operators compete on performance, and businesses keep those predictable costs. My take? The timing is absolutely brutal. You don't announce a major infrastructure overhaul when your token is already in freefall and market sentiment is this fragile. It's like proposing marriage while your house is on fire. Technically romantic, but probably not the moment. The relative strength index sits at 41 on the daily chart, sliding toward oversold territory. Bearish momentum is accelerating, and here's where it gets spicy. The MACD indicator is flirting with a death cross. If that blue MACD line crosses below the red signal line, we're looking at a textbook sell signal that could trigger another wave of panic selling. Technical analysts estimate a potential 15% drop to $0.0132 if this downtrend continues. That's not a dip. That's a cliff dive with no parachute. But wait, there's a historical twist that makes this even more complicated. According to performance data spanning 7 years, November is traditionally VeChain's strongest month. The median return sits at 10.9%, with an average return of 20.9%, the highest of any month. So mathematically, we should be seeing strength right now. Instead, we're watching VET crumble like a poorly baked cookie. Why? Because macroeconomic uncertainty and risk-off sentiment have pushed crypto investors to the sidelines. Nobody's buying this upgrade story when fear is the dominant emotion. Let me break down what's really happening here. VeChain is solving a problem that enterprise clients care about: centralization concerns and stakeholder participation, but they're doing it when retail investors are too scared to care. The DPoS upgrade genuinely improves decentralization and security. Allowing VET holders to stake and participate does democratize the network. These are legitimate improvements, not vaporware. But the market doesn't reward fundamentals during bear cycles. It rewards survival and liquidity. So, there's this well-known principle in crypto markets: good news during downtrends just gets ignored while bad news, gets amplified. VeChain's announcement should, in theory, boost confidence, but instead, it's being totally overshadowed by broader market weakness. And, honestly, VET's horrific technical setup. The token is trapped below all major EMAs, which now act as resistance levels. Every bounce attempt just gets smacked down. Traders aren't really thinking about staking rewards or network security right now. They're thinking about capital preservation. And look, here's my expert opinion. The DPoS upgrade is fundamentally positive for VeChain's long-term positioning, but it's strategically mistimed for short-term price action. If you're a long-term holder betting on enterprise adoption, this upgrade definitely strengthens your thesis. But if you're a swing trader watching these charts, you're probably sweating bullets because the technical damage is, well, pretty severe. The immediate support at 1.5 cents is critical. If bulls can defend that level, we might see consolidation before any recovery attempt. If it breaks, that 15% drop to 0.0132 becomes the base case scenario, not the worst case. Let's talk about December, VeChain's historical kryptonite. While November typically delivers gains, December consistently reverses that momentum. This pattern has held for years, suggesting institutional or whale behavior that takes profits before year-end. So even if VET catches a November rally from current levels, history warns us not to get too comfortable. You might catch a short-term bounce, but the December curse could erase those gains faster than you made them. The market structure here is unforgiving. Below 0.0150, there's limited support until we reach the 0.0132 zone. That's your next major battleground if bearish pressure continues. Above current prices, you're looking at resistance at 0.0182. then 0.0203, then 0.02289, all those EMAs we discussed earlier. Each one represents a layer of sellers waiting to exit their positions. Breaking through that gauntlet requires volume and conviction that simply don't exist right now. According to VeChain's explanation, the Hayabusa upgrade maintains predictable costs while enhancing decentralization. For businesses building on VeChain, this matters enormously. Predictable gas fees enable consumer-grade applications without the transaction cost volatility that plagues Ethereum during congestion. But retail investors aren't pricing in business utility. They're pricing in speculation, momentum, and fear. That disconnect is why you see groundbreaking upgrades announced during price capitulation. My analysis suggests VeChain is building for a future where enterprise blockchain adoption accelerates, but that future isn't this month or next month. The DPoS migration is a chess move for 2025 and beyond, not a catalyst for immediate pumps. Patient capital wins these plays. Impatient capital gets liquidated. The risk-reward here is tricky. So, if you're entering VET now, you're basically catching a falling knife, hoping that the support at 1.5 cents holds, and that, November seasonality finally kicks in. If you're already holding, you're kinda stuck deciding whether to average down, hold through the pain, or just cut losses before the potential December weakness hits. Honestly, neither choice feels great, which is why, volatility is just crushing trader confidence right now. And, hey, one more critical point here. DPoS systems, they really do require active participation to function properly. If VET holders don't actually stake and delegate, then the upgrade's benefits just don't materialize. VeChain needs real community engagement, not just a technical upgrade on paper, but that kind of engagement totally depends on price stability and positive sentiment. And, to be fair, both are in pretty short supply right now. It's a classic chicken and egg problem that could definitely delay the upgrade's real impact. So, where does this all leave us? Well, VeChain has announced a legitimate, technically sound upgrade to delegated proof of stake, promising better decentralization and more stakeholder participation. But the token is still trapped in this brutal downtrend. Technical indicators are just flashing red everywhere. And, honestly, historical December weakness could erase any gains we might see in November. The upgrade does strengthen VeChain's long-term value proposition for enterprise clients, but it's not going to magically reverse bearish momentum in a risk-off market. If you found this analysis helpful, make sure you're subscribed and check out my other videos where I break down exactly what's happening across crypto markets. Thanks for watching, stay sharp out there, and I'll see you in the next one. This is not financial advice. Cryptocurrency investments carry significant risk, and you should never invest more than you can afford to lose. Always do your own research and consult with a qualified financial advisor before making investment decisions. Trade safe, everyone.